Hello there, this is James, and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Wednesday. In today's program, I want to talk a little bit about some exciting news for every Man United fan out there and the implication that it has on the Man United's share price and the potential outcomes. Plus, discuss the build up for the key FOMC minutes due later today, and of course, the continuing worry of more lockdowns in China. But before I get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, again, like I say, obviously it's the time of the World Cup. And yesterday I had one video I titled after the World Cup, nothing to do with the World Cup, but I mentioned it briefly. And again, we've got another football story, football-related story. And that is, of course, that the Glazer family may sell part or all of their ownership of Manchester United. Now, I don't know if you remember about a couple of months ago, I did another video on Man United when obviously Elon Musk, I speak about him a lot. Elon Musk tweeted that he might buy Manchester United, and that of course set the market all really excited. Then later down the line, obviously he said he was just joking, and then the Glazer family said they might look partially sell some of it, which again gave hope. But now they're coming out and actually said they're willing to sell more than part of it. And what does that actually mean, though? Anyway, this is what they had to say. This is from the Glazer brothers. Okay, they said, as we seek to continue building on the club's history of success, the board has authorized a thorough evaluation of strategic alternatives. It goes on to say, we will evaluate all options to ensure that we best serve our fans and that Manchester United maximizes the significant growth opportunities available to the club today and in the future. Now, what makes this more interesting than the previous announcement a couple of months ago when they were looking to sell part of it, is that the American investment firm Ray Group, that's the company who supervised Chelsea's 4.26 billion sale back in May, is the company the Glazers have hired to advise them on this. So, as a Man United fan, I believe it when I see it. I don't trust the Glazers. I know I was going to get to that point, but it's a very valid, very good point. Hello there, by the way. But like I say, yeah, he's super. But this is what makes it more interesting than the previous announcement a couple of months ago, because the American investment firm Ray Group did actually do the Chelsea purchase, or supervise the Chelsea purchase, and they've been brought in. And what also is quite interesting is this announcement came a few hours after Manchester United announced that Cristiano Ronaldo was leaving the club on mutual agreement. And a couple hours later, the Glazer family announced this. So it's almost like damage control in some ways, because obviously they realized that the circumstances with Ronaldo, he's a star player, obviously sells a lot of T-shirts and he's got one of the greatest players on the planet. But it seems to me this announcement was also a little bit of damage control, because they knew there was going to be a lot of backlash and they've had a lot of backlash from the fans already because of this. So, this announcement maybe be a bit of PR. Don't forget, we've already had one attempt. Britain's richest billionaire tried to or offered to purchase the club a couple of months ago, and the Glazers says they weren't selling. So it is an about turn on this if it is to go through with this. It may be a partial sell, or they may be just simply looking for further investment, because obviously the ground, Old Trafford, and the training facilities needs millions of investment to get it refurbished. But anyway, composed to Chelsea, which is valued at 4.26, which was sold for 4.26 billion, Man United would probably most likely go, if they do find a buyer willing to sell, willing to buy, United is probably most likely valued between 5 to 7 billion because it's a far bigger club than Chelsea. But anyway, this is quite an interesting development, certainly if you're a Man United fan, and as well as that, if you trade the stock market, because on the back of this, United share price rose by 11.11% in pre-market trading, because this was announced just roughly before the market was closed. And let's actually have a quick look at Man United's share price, where it is at the moment, and see where it could be on the open of the US session. Let's pull this up. Now, as you can see, around the time of, like I say, the Ronaldo announcement and obviously this announcement by the Glazers, it was trading around about $12.95. It has then sort of rose and actually closed on the day 14% higher, okay, for around about $14.94. Since that, the Glazers come out and say they're willing to sell. It's now 11% higher than this. So it'd be interesting to see where it is come the US Open and how much this story will develop, of course, because don't forget the market cap of Man United at the moment is on their share price, that is 2.4 billion. Okay. The height of their share price or height of their market capitalization was back in August of 2018 was 4.8 billion. So this is obviously going to potentially be a big interesting mover for this stock and for the developers. And obviously, for the hope of Man United fans out there who want to see the back of the Glazers and see the club, the future of the club, look a little bit brighter. But it'd be interesting to see how it goes. But anyway, that's the interesting development. Let's see what happens. Now, of course, FOMC minutes today. This is the big one today. Okay, this is the big one. And really what's going to be interesting is what the market's going to be going through this 18-page document, going through all the wordings to see how United, again, I'm using United, it just happens to work out that way. United, the FOMC members are together in fighting inflation. Because don't forget, we've had general chit-chat of many Fed speakers, I call it, many Fed members over the last couple of days, last week or so, sort of speaking a little bit differently. They all agree of their commitment on fighting inflation. They all are in agreement with that. But are some waning to be a little bit lighter on it? Now, I know the general consensus is that we're going to get 50 basic points in December, and they've all pretty much said that. But it's the case of slowing it down. And this is what the minutes are going to be telling us, how united or how together they are. Or are we beginning to see people with different opinions on the fight against inflation? And here's the other thing. Which I think is key for me, which at the time, the market paid attention to. But then after a while, because the market tends to have a short-term memory, has sort of forgotten a little bit about. And that was in the last FOMC press conference back on November the 3rd, where they did the interest rate decision. Jay Powell said that rates will go higher than originally expected back in September. Now, yes, they may do slower increments of rate increases. Now, I've said already, they're anticipating 50 basic points in December, maybe 25 then in January. But it's no longer a case of how aggressive they are. It's how high they're going to take it. That's the thing, how high they're going to take it. The general consensus originally was they would stop around 4.75. That's their initial thought, where they would stop it. But, the question is, we'll get 50 in December. But how high will the actual interest rates go? And what implications does that have on the US economy in the future? Now, Bullard said, don't forget, and he scared and spooked the market massively over a week ago when he said he could see interest rates anywhere between 5 to 7%. And the market got really, really scared. But again, the market has since forgotten that. It's got a short-term memory on this. So these minutes could shine some light on how high it could potentially go and how aggressive they are. So we could expect certainly some fireworks. The only thing for me, which sort of dampers this event slightly, is that at the time, yes, we might see fireworks. But tomorrow, don't forget, it's Thanksgiving. It's Happy Turkey Day for America. So the markets are going to be closed. So that could affect liquidity, which can make it even more dangerous as well, certainly for currencies. Okay, so we've got to bear that in mind. Now, that's going to be obviously the exciting event tonight. there is another exciting event, not probably as big as the FOMC, but something which just as exciting, and that's happening tonight as well. I'm a big fan of the Elliott wave theory as well, by the way.
Let's go.
Very big fan.
I traded the DAX in the morning, showed some really good signs of volatility as well.
Anyway,
join James and Stefanos every Wednesday at 1800 UTC for another lesson at Tixee Trading School, your key to a better understanding of the financial markets.
And that's right. We got the next episode of Tixee Live Presents the Trading School. This is tonight at 6 p.m. UTC. The FOMC, funny enough, actually comes out at 7 p.m. UTC. You never know. If I'm still live on air with my colleague Stefanos, we might talk a little bit about that as well when it happens. But anyway, tonight's topic is going to be about moving averages, understanding moving averages. And both me and Stefanos, we'll get in deep about this and explain how moving averages can be potentially used to benefit your trading. Now, don't forget, these are live broadcasts because it's still Tixee Live. A live does mean live. However, it's not going to be on YouTube for another 2 weeks since it's broadcasted through a different source. The link to register for this event is in the description below. So please click on that link there and register for it and come and have a look. And I hope to see you there. It should be a really interesting topic. I like using moving averages and discussing moving averages. So it could be quite an interesting, it will be an interesting topic. So please come along and join me for that. On a couple of other things as well I want to talk about now, moving on. China, there is still a lot of concerns about China and whether or not it's at the point of no return, because the daily case count has now climbed to around 28,000. And don't forget, like I say, they have zero tolerance when it comes to COVID. From this Monday, 412 million people were affected by lockdown measures. This is versus the 340 million a week ago. So this is quite concerning. And don't forget, 20% of China's economy has so far been negatively affected by COVID controls. And there's the old saying, of course, if either America or China sneezes, the world catches a cold. So this is why we have a lot of risk-off appetite still currently a little bit in the market. And the thing is, this is spreading out even more because there was very angry protests at a giant iPhone factory in Zhangzhou. Now, this is managed actually by Foxconn, which is a Taiwan company, but Apple, subsidiary, uses Foxconn to manage this factory. And you're beginning to get a lot of people now getting very angry because of the lockdown situations and pay and things like this. So this is, potentially going to become a big issue. So something we need to keep an eye on and be aware of. And this is why we are seeing doubt and sort of bouts of risk-off appetite, particularly affecting commodities in particular, which we'll have a look at. But anyway, let's have a quick look at the market and see how we currently stand. Let's start off with the euro. Okay, with the euro. As you can see, this is on the 30-minute. Okay, since the 23rd, we've seen a steady rise on the euro, currently trading 1.03. Because like I said, we are getting that weaker dollar. We have been experiencing a weaker dollar in general over the last couple of trading sessions. It's we've had 3 trading days of losses for the euro. We'll look set to potentially have a second day of gains for the euro against the US dollar. However, like I say, really, I think what we're going to be seeing today, in many ways, I think we're going to see a little bit of range trading as we wait really for what the FOMC minutes tells us. The cable as well, British pound, US dollar, if I can see it, there it is. Again, like I say, that's spiked up a little bit better because they had slightly better services PMI. Still needs to break though. It's trading above this level at the moment, where it's trading at 1.1918. As you can see, that key level 1.19005 has been holding it. So we need to see if we can stay above that level to contain momentum with the UK. Other currency pair I want to talk about today as well is the Kiwi. I know we talk about Europe, and this is a European session, but this happened earlier on today. The Central Bank of New Zealand raised interest rates by 75 basic points, the most aggressive move they've done in 14 years, which has given the Kiwi a little bit of strength against the US dollar. But interesting pair with this, for me, really, is these Aussie dollar, New Zealand dollar. And as you can see, the Aussie dollar has collapsed, it's had a lot of pressure against the Kiwi, and it's currently trading at the moment at an eight-month low, currently trading at 1.0768. If we look at some commodities now, obviously oil, okay, we talked about oil on the bounce back, but OPEC did, or OPEC Plus did at the beginning of the week. It's now sort of calmed down a little bit, sort of slightly more range bound, $81.35. Like I say, this be interesting to watch this, especially with more and more developments with COVID in China, because that is going to greatly affect demand for oil. So it'd be interesting to see that. Brent yesterday was really making a challenge to try and get back above $90 a barrel. It's since come down a little bit. It's currently trading at $88.40. And guess what else we're going to talk about? Obviously, we're going to talk about gold, because it had a little bit of steam out of its momentum. Currently trading now at $1,739.50. Like I say, commodities slightly under strain, as you can see. Realistically, it's had, 4 days of losses now. It's currently holding just above that key level, in my opinion, of $1,726.48. The FOMC, again, these minutes could greatly impact the yellow metal, so it's worth keeping an eye on this today as well. What else is due this week? Really, like I say, everything is, we have got US durable goods later today. That'd be interesting to see. However, realistically, it's all about the FOMC minutes. That's the key. Like I say, the only thing for me is the liquidity side of things, because tomorrow is Thanksgiving. So we need to see, obviously, the implications of that as well. So FOMC today, US durable goods, still key, important information. Don't forget, US durable goods is the purchase of things which have at least a 3-year lifespan. I'm talking about cars, boats, things like that. So that'd be quite interesting to see. But really, it's the FOMC minutes. That is the key information today, the key event for today. FTSE currently trading, as it currently stands, in the green, 0.43%. DAX currently trading slightly in the red, 0.11% negative. Euro Stock 50 currently trading in the green, 0.10%. Don't forget, you can talk to me anytime you wish, or share with me your opinions. Let me know what you think. What do you think about the Glazer story? Do we think we finally see the Glazers sell Man United? Obviously, I think all United fans are hoping that happens, but will we see that? What do you think about the China lockdowns as well? How do you feel about that? Are you excited about the FOMC? I've done a couple of watch-alongs on those, because it's quite late at night. I've done it from home, and it can have an impact on the market. It takes a little while, though, because it's like usually an 18-page document. It takes a while to decipher what it actually says, because, like I say, it's minutes. It's a document. It's not like data. It's minutes. So it can take a little while to read and digress. But, it still is a key indication of what might lie ahead for the Fed next. Don't forget, if you think of a question later, you can put it in the comments section, either on Facebook or YouTube. I will see them, and I will reply to them next time I go live on air, which unfortunately won't be today, because today on Wednesdays I only do one broadcast, because the rest of my day is focused on the Trading School episode for tonight. So I will be back online again tonight at 6 p.m. UTC for the Trading School, but not for Tixee Live. Tixee Live will be back on air again, though, tomorrow at 9:30 p.m. UTC, yes, indeed, to cover the European session, and again tomorrow at 3 p.m. UTC to cover the US session. Plus, I'll be announcing the hashtag Ask James episode for Friday. This episode is going to be about introduction into market sentiment. So please come along and join me for that. It'll be quite an interesting topic. That's on Friday. So I'll be making an announcement about hashtag Ask James on Friday. If there is no questions, not to worry. Like I always say, if you've been watching me on Facebook and you've enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video and you found it interesting, useful, subscribe if you like. Hit the notification button so you know next time when I'm going live. If you enjoyed this video, found it interesting and useful, and you put up with me, my over-the-top enthusiasm for the market, I just simply can't help, because I love the markets, then give me one of these. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your research and do your due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.